Thanks for joining us on Parlance. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines. Indian markets declined for the second straight day. The Nifty trades below the 10,750 mark. Oil retailers lead the losses.
ICICI Bank MD and CEO Chanda Kochhar goes on extended leave till internal investigations are over. Sandeep Bakshi takes over as Chief Operating Officer.
Kraft Heinz may be looking to sell the Complan brand. That's a Bloomberg News exclusive.
And Asian markets are bearing the brunt of heightened tensions between the US and China on trade.
All right, all of that coming up over the next hour. But let's start with a look at the markets. A down day across global markets and in India. Neeraj is here with us to tell us how trade is shaping up.
We are actually faring reasonably okay, though I don't know for how long. Maybe the HDFC Twins and a couple of other heavyweights giving that support because that pocket is trading marginally in the green. And commodities haven't cracked as badly as one would have thought. So the Nifty Bank less than 0.5% lower, and therefore the pressure on the index that much lower. But yeah, pressure across the world, and just look at what's happening across the Asian markets. Look at what's happening to Shanghai. The Chinese markets by and large under a lot of pressure, and that should, 3.78%. This is the lowest point of the day for Shanghai, of course. They're ending at those levels. Hang Seng about 950 points lower as well. So the Asian bourses are a tick of red, and which is why I'm saying that we haven't corrected as badly. Commodities, though, continue to grind lower. The likes of Vedanta, Hindalco, etc. All of this is the 9th or the 10th straight day of a fall that is coming in for almost all of the commodity stocks. So that's one basket which is under serious pressure. OMCs have given up some of the gains that they had yesterday. Remember, yesterday we did well, in part also because OMCs were doing very well. You don't normally see the HPCLs and the IOCs in the top contributors list, but in today's session they have given way too. So OMCs are off, and that is also putting some bit of pressure on the markets today, but nothing as bad as what's happening in the rest of the world. The broader markets, some bit of gains to select pharma names. They are doing reasonably okay. We just look at the Nifty 500 gainers, you will see a splattering of pharma names out there and a couple of individual names. But by and large, the market breadth very, very weak, and likely to be a matter of time before we see some more pressure because the world is looking a fairly unhappy place for a bull this afternoon.
Yes, thank you for that. You're right. Global markets are extremely weak. But the big story back home, repeated allegations of impropriety in loans granted to Videocon has forced Chanda Kochhar to extend her leave of absence. The MD and CEO of ICICI Bank will be on leave until the independent investigation by Justice Sri Krishna is completed. Meanwhile, the head of life insurance arm, Sandeep Bakshi, has been appointed as the COO for a period of 5 years in Kochhar's absence. Bakshi will be in charge at ICICI Bank. Vishwanath is standing by with the timeline of this entire ICICI Bank Videocon loan saga.
Right, Asha. So this entire story actually starts back in March of 2016, which is when there was an investor by the name of Arvind Gupta who had invested in ICICI Bank as well as Videocon, and he had put out a letter to the finance minister as well as the prime minister, suggesting that there had been some kind of dealings between ICICI and as well as Videocon, where certain transactions were questionable. Essentially pointed out that Venugopal Dut, who's the promoter of Videocon Group, had invested in a company where Chanda Kochhar's husband, had started. And that's when the conversation started. But of course, that sort of died down. The board also did not find anything wrong. Allegedly, the chairman had conducted some kind of an investigation. In 2017, later on, what happened was Videocon Group was termed as an NPA for most banks, including ICICI. Remember, they have an exposure of about 3,250 crore against this company. Fast forward to 2018, March 2018, which is when the entire conversation started again, because a lot of social media buzz started about Chanda Kochhar possibly facing some action because of a quid pro quo deal. And his blog post, Arvind Gupta's blog post, came back into the discussion. Immediately after this, the board of the bank suggested, they put out a statement to the stock exchanges saying that they have full faith in the CEO and that they did not find anything wrong with the way she conducted herself. This statement by the board was immediately followed by an Indian Express story which pointed at some links between Chanda Kochhar's husband and Venugopal Dut. Then again, May 2018, we saw the markets regulator coming into the picture. The SEBI sent out a letter to ICICI Bank as well as Chanda Kochar asking certain questions about the way ICICI Bank had dealt with Videocon Group. An answer was submitted by the bank and by the CEO to the Securities and Exchange Bureau of India. Of course, they were not convinced. Again, in May 2018, what the bank then announced is that the bank's board had received another unnamed anonymous tip-off from a whistleblower suggesting that there were some problematic dealings between certain corporate groups and ICICI Bank, and the MD and CEO had some alleged improprieties on her part, for which the bank's board suggested they created an investigative team. This will be led by a retired Supreme Court Judge B.N. Sri Krishna, and of course he's yet to choose a team, but once that is done, then the terms of reference is set, the investigation will start rolling. As a consequence of this, and this happened last night, which is when Chanda Kochar, in a statement that the bank board put out, it said that Chanda Kochar has decided to go on extended leave. She will not be back till the investigation by the Sri Krishna committee is over. And in her absence, in Chanda Kochar's absence, we will see Sandeep Bakshi, who is the MD and CEO of ICICI Prudential, or was the MD and CEO of ICICI Prudential till yesterday, take over as a chief operating officer of the bank. He will report directly to the board in the absence of Chanda Kochar. Once she comes back, if the investigation clears her name, then of course he will report to her as the chief operating officer of the bank.
Right. A brief mention, Vishwanath, of what the management structure will now look like, because there's now a three-tier structure at ICICI Bank.
That's right. So originally, under the structure that the bank had created, the MD and CEO was the executive chief of the entire bank, and then there were four executive directors under her. But now what happens is, ICICI Bank board exists, of course. The MD and CEO still holds that position. She's on leave, but still holds that position. And the COO of the bank, Sandeep Bakshi, will be reporting to her. Now that she's on leave, he will report directly to the ICICI Bank board. Under him are all of the heads of various businesses as well as some subsidiaries. So firstly, there's Vishakha Mulye, who handles the wholesale banking group of the bank. There's Vijay Chandok, who handles SME as well as international banking. Anup Bakshi handles the retail banking division of the bank. All the other departments of the bank, which originally existed under N.S. Kannan, would be moved directly to Sandeep Bakshi. N.S. Kannan instead has been moved to ICICI Prudential Life. He will take over as the MD and CEO of that company, and he will continue to report to Sandeep Bakshi. So will Bhargav Das Gupta as well as Shilpa Kumar, who are both leading two subsidiaries of the bank. So this is broadly the structure. Sandeep Bakshi's position has sort of been an entry now. It's been a lateral entry now.
Rishi, thank you for that. Brokerages, meanwhile, have welcomed this move by the board. In fact, Sandeep Bakshi has been touted as the de facto CEO and possibly Chanda Kochar's successor. Shraddha Babla joins us with what the key takeaways from brokerage notes are today. Shraddha.
Well, yes. So overall, analysts do see this as a positive move for ICICI Bank because most of them do believe that Sandeep Bakshi, is now the de facto CEO, and that more importantly reduces business uncertainty. So you have Jefferies, which has retained a buy with a target price of 380. They've said that a CEO role seems unnecessary in the long term. So for now, it looks like the board has found a middle ground. They continue to retain a buy on ICICI Bank because of the gradual improvement in the operating environment, the arrest of fresh NPL formation, and cheaper valuations as well. IDFC Securities, a similar view, maintain outperform, target price unchanged at 370. They've said that it's a win-win not only for ICICI Bank but also ICICI Prudential. They see Mr. Bakshi as the de facto interim CEO. They believe, more importantly, that he will continue with the existing policies of the bank. Board with this has ensured smooth business continuity and also address concerns on succession planning. So all of this are boding well according to them, and they're saying that now the focus will move back to earnings turnaround. Citi has retained their buy target price at 390. Again, they said that the uncertainty regarding management continuity will now reduce significantly and reduce overhang on the stock. Kotak has maintained a buy with a target price of 400. Again, saying that Bakshi taking charge actually ends months of speculation at the senior level.
All right, so just a brief mention of how the bank has done under Chanda Kochar so far, not to imply that she will not continue in her post after this story is over. We'll find out about that later. But as things stand right now, how is the bank done under her?
Right. So if you look at the three different parameters that we have looked at, remember Chanda Kochhar had taken over as the CEO of ICICI Bank in May 2009. That was the time when the bank adopted a strategy of focusing on the corporate book side on account of the growing infrastructure investments in the country. So on the back of that, the bank's loan book has more than doubled, nearly from 2.3 lakh crores in FY10 to 5.12 lakh crores at the end of 2017-2018. Second, when you look at the gross NPA number, you will see just how sharply they have moved up. 4.32% is where the GNPA number was in March 2009, and that has gone up to 9.90% as of March 2018. So in a 9-year period, and you will see on the chart that a majority of that acceleration in the gross NPA number has come from March 2014 itself. And thirdly, if you compare how the bank has done as compared to its private banking peers, there's been a clear underperformance. So ICICI Bank has shares have risen 200% in the last 9 years. They've outperformed PSU lenders, but again you can see that they have underperformed private banking peers by a huge margin, and that's probably to do with those bad loans.
All right, thanks so much for that, Shraddha. That's the ICICI story, all angles of it. We'll discuss a little bit more at about 4 o'clock with Anil Singhvi of ICANN Investment Advisors. Do tune in for that.
Kraft Heinz is taking a cue from GSK Consumer, is looking to sell its milk-based powder drink brand Complan in India. The US giant is said to have appointed an advisor to find a buyer for the brand. Sanjay of Bloomberg News now joins us with more details. Sanjay, how much is Heinz hoping to get from the sale?
Kraft is exploring a potential sale of its brand Complan. The reason is that, of course, indeed sales are sliding in India, which is very important market for them. Also, heightened regulatory hurdles are also hitting them very badly, and government has come out with a lot of regulations, a lot of steps that they should reduce caffeine and sugar content, etc. And another reason, the potential reason, is a lot of domestic players are also coming into this market, this health drink market, and they're also marketing their brands as most healthiest one, including naturals, Ayurvedics, etc. For example, Patanjali and Shri Ayurveda, etc., are in the fray, and Kraft, what we are learning that they just want to sell this brand before they face any further challenges from regulators and government, etc.
All right, that's a Bloomberg News exclusive. Meanwhile, cost pressures are on the rise for FMCG companies as key inputs like wheat, sugar and copra have been getting costlier. Just how much have these input costs spiked? Which companies stand to lose the most? Agam Vakil joins us. Agam.
Well, so over the last 1 month or so, what we started to see is an increase, an inch up of prices for commodities such as wheat. We also have seen a little bit of an increase in commodities such as milk, along with copra, and sugar perhaps stands out when it comes to the agri commodities, because that has seen a surge of as much as nearly 18% month on month. Now, in terms of some of the companies that can face pressure on gross margins on account of the rising and hardening prices of input costs, is Britannia and Nestle, specifically on account of the increase in wheat, milk and sugar. And wheat, of course, while it remains steady, sugar specifically could bear down on some of their margins. Jubilant Foodworks, of course, also has substantial exposure to wheat as well as dairy products such as cheese, so we continue to watch out for that as well. Copra, while we have seen a surge on a year-on-year basis, and that has also seen an up move around 2% month on month, Marico has substantial exposure to copra. In fact, good 40 to 45% of the input costs are copra itself. The management of Marico suggests that copra prices have peaked out in the near term. Moving on to commodities which are crude linked, such as titanium dioxide, lab palm oil, or for that matter polymer. Leaving aside palm oil, we have seen an uptick in titanium dioxide, lab as well as polymer, and once again all the soap producers, the detergent producers have substantial exposure to some of these commodities such as HUL and Godrej Consumer. Of course, so we have mixed cues coming in. Lab specifically is moved up as much as 2.8%, which is used as a surfactant for detergents. And several other input costs have also seen an increase, which which uses ingredients for soap. So HUL and Godrej Consumer in this case stands out. So we could see a little more pressure for the likes of Nestle, Britannia, HUL and Godrej Consumer as far as Q1 is concerned.
Agam, thank you for that. Let's talk about Air India now. Government's failed attempt at finding a buyer for Air India has prompted the Finance Ministry to contemplate an IPO. But recent history shows that the primary market has not been too kicked about public sector units. In fact, the last 5 government IPOs have been bailed out by public sector financial institutions like LIC. Samad's here who's put some data together on how these government IPOs have done. But one disclaimer before that the Air India IPO has not been announced. It's only a proposal at this stage. Samad.
So if you see, the Air India IPO could be a bit difficult task for the government, because if you see the last 5 government IPOs that have hit the primary market, that is Mishra Dhatu Nigam, Hindustan Aeronautics, Bharat Dynamics, New India Assurance and General Insurance Corporations. Now all these companies were debt free, and they saw the revenue grow at a compounded annual growth rate of around 5 to 42%, and on the net profit front it grew at the range of around 4 to 15%. Now only Hindustan Aeronautics saw here a drop of around 5%, and that is because of lower other income and higher tax expense in the financial year 2017. On the return ratios side, if you see, the return on equity for Mishra Dhatu Nigam, Hindustan Aeronautics, Bharat Dynamics, New India Assurance and General Insurance Corporation was in the range of around 8 to 22%, while return on capital employed was in the range of around 8 to 22% in this side also. And despite these factors, if you see the subscription for these companies, it was close to around 1 times. And in fact, out of the total issue size of around 26,472 crore rupees that was raised by these 5 companies, nearly 62% was funded by other government companies, and LIC played a major role in this. Now, Mishra Dhatu Nigam raised close to 438 crore rupees, of which 252 crore rupees was subscribed by government companies. Hindustan Aeronautics raised close to 4,100 crore rupees, of which 2,800 crore rupees was funded by government companies. General Insurance Corporation raised close to 11,300 crore rupees, of which 5,641 was funded by government companies.
Okay, so how do Air India's financials look over the corresponding period, Sumit?
So if you see Air India's financials, that is Air India plus Air India Express, the company's revenue grew at a compounded annual growth rate of 9%, that is from 17,800 crore rupees in FY13 to close to 25,100 crore rupees in FY17. On the bottom line front and in the operational front, the company has been making losses. Right from FY13 to FY17, the company has been reporting a net loss of close to around 5,800 to 3,500 crore rupees. On the operational front, the company has been profitable for the last 3 financial years, but in FY17, if you see, it is dropped again compared to FY16. On the balance sheet side, the company has a huge debt of around 48,000 crore rupees, and the company has a negative net worth of close to 20,900 crore rupees. Now, if you see the debt figure has come down compared to the past. Now, that is because of the fund infusions done by the government in the past in Air India. So what could be the factors that could motivate the investors to invest in Air India's IPO? First is that the huge debt of 48,000 crore rupees, 30% of that debt is backed by its asset, that is the 86 owned and leased aircrafts of the company. Second is the unabsorbed depreciation that the company has. It has close to around 32,000 crore of unabsorbed depreciation, which means that the company will not have to pay taxes as and when it becomes profitable. And third is the premium international and domestic slots that Air India has, and which is difficult to get by as of now. It has around 5,400, around 4,000 domestic slots in 54 destinations and close to around 2,800 international prime time slots in around 39 destinations.
All right, Sumit, many thanks for joining us. Let's move on. What happens when a privately built and managed city goes bust? We may soon find out. Lavazza, that was envisioned as a hilltop paradise, is becoming a hell for some on earth. The days of zero crime are over. Litter soils the man-made lake. Storefronts are vacant and maintenance is late or non-existent, and there's hardly any construction at the unfinished buildings. Take a look at this special report.
If ICICI closes down, will we get water? Will our sewage treatment be attended to? Will the roads be maintained? Will the roads be lit at night? All these are genuine worries.
that story on BloombergQuint.com as well. Do go and read it. The ambitious Mumbai-Ahmedabad bullet train has made little progress, facing land acquisition hurdles. The project is stuck in a quagmire with no clarity on what compensation will be paid to farmers. Not a single acre of land has actually been acquired by the Gujarat government. Here's a report.
मैं देश के 125 करोड़ देशवासियों को मुंबई अहमदाबाद हाई स्पीड रेल कॉरिडोर का इस भूमि पूजन के अवसर पर कोटि कोटि शुभकामनाएं और बधाइयां देता हूं।
December 2018, it is said that the land acquisition for the project will be completed. However, it is June 2018 already and not a single acre of land has been acquired by the Gujarat government.
ખેડૂતો સમજે છે કે પ્રોજેક્ટ સરકારે રજૂ કરવાની છે તો અમારે જમીન તો આપવા પડવાની જ છે, પરંતુ ખેડૂતોને સ્પષ્ટતા કરીને કહેવું જોઈએ કે તમારી જમીન જે જવાની છે તેના આટલા પૈસા મળશે તો ખેડૂતોને કોઈ વાંધો નહીં આવે.
In certain districts, the notices were issued overnight and a meeting was called immediately next day without the farmers knowing what it was all about, without having the details of the project.
ફક્ત એક મિટિંગમાં અમને બોલાવેલા છે. મિટિંગની જાણ બહુ ધીમે ધીમે કરીને અમને સમય ઓછો આપે છે. નોટિસ તમને મળે પછી 4-5 દિવસમાં તમારે જવાબ આપવાનો કેવી રીતે આપણે આપી શકીએ?
This project falls in two states, which is namely Maharashtra and Gujarat. And as per the 2013 Land Acquisition Act, the center is the governing body of the acquisition process. However, the Gujarat government is introducing the Gujarat Amendment of the Land Acquisition Act into the acquisition process.
ये कैसे हो सकता है कि आप गुजरात का कानून नीति नियम लगा देंगे? महाराष्ट्र में ये कैसे हो सकता है कि आप अपने तरह से कर लेंगे? आपको तो केंद्र का जो कानून है उसको लागू करना है, और वो केंद्र का कानून ये कहता है कि सबसे पहले सामाजिक असरों का अभ्यास होना चाहिए.
जो मीटिंग रहते हैं को जानकारी कोई पेपर में छोटा बड़ा पेपर में दे देते हैं, सब किसान को मालूम नहीं रहता है, इसलिए क्या सब लोग इकट्ठा नहीं हो रहे हैं. तो सरकार क्या रही है कि ऐसा दाव पेच लगा रही है कि सबको जान नहीं हुआ है और ज़मीन ले लेने का है, ऐसा मुझे हम सब किसान को लगता है.
मैनेजर थे वो बोल रहा था कि वो सब लोगों ने ऐसा कहा कि वो कहते थे कि ये प्रोजेक्ट सरकारी कामकाज है, वो कभी भी वो एक बार मंजूर हुआ सो हुआ, वो उससे पीछे हट नहीं हो सकती.
कानून ये भी कहता है कि आप प्रिलिमिनरी नोटिफिकेशन जो सेक्शन 11(1) के तहत करते हैं, उसके साथ साथ कलेक्टर ने मार्केट रेट भी बताना है कि हर गांव का मार्केट रेट क्या होगा. ये इस सेक्शन 11(1) के नोटिफिकेशन के साथ किया गया नहीं है.
अरे उन लोग का जो सेंट्रल लाइन है ना, ऐसा जा रहा है बताइए. और ज़मीन का वैल्यूएशन या घर का वैल्यूएशन, उसके लिए कोई नोटिफिकेशन किया नहीं है, कोई आया नहीं है, कोई हम लोग को बताया नहीं है. और जो हमारा अंदाजित हम लोग का इधर से एरिया के हिसाब से अंदाजित ज़मीन जा रही है, तो ज़मीन का प्राइस, खाली ज़मीन का, घर का प्राइस तो हमें अभी नहीं बता सकता है. तो ज़मीन का प्राइस भी जाएगा तो 50-60 लाख के करीबन होएगा.
गुजरात का आप किस्सा ले लें तो 2011 का जंतरी रेट चल रहा है, जिसको रिवाइज़ नहीं किया गया. 8 साल हो गए हैं. तो 8 साल पुराने जंतरी रेट के आधार पर अगर कंपेंसेशन देंगे तो जाहिर है कोई भी किसान ये एक्सेप्ट नहीं करने वाला है.
जो रेट है वो बहुत कम है मार्केट लेवल से, वो किसान को मरने का जैसा है. वो जो किसान की जो ज़मीन जाएगी वो कहीं भी कोई 1 बीघा भी ज़मीन वो पैसे से ले नहीं सकेगा.
All right, coming up next, Trump threatens an all-out trade war with China unless China backs down. We'll tell you all about it on the other side.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you.
Do you have analysis paralysis? A case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m. Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. Only on Bloomberg Quint.
Welcome back. You're watching Power Lunch. Let's take a look at the headlines. Indian markets declined for the second straight day. The Nifty trades below the 10,750 mark. Oil retailers lead the losses.
Global markets bear the brunt of heightened tension between the United States and China on trade.
The Indian rupee slips below the 68 to the dollar mark. Intervention seen from the Reserve Bank of India.
US President Donald Trump has threatened to escalate the skirmish with China into an all-out trade war. He's promised to impose massive tariff on Chinese goods unless Beijing reverses course on its own trade actions. Tom McKenzie of Bloomberg News reports.
Well, what Trump is saying is that if China goes ahead with its threat to retaliate with $50 billion worth of tariffs, or tariffs on $50 billion worth of US goods from July the 6th, then he will look at imposing an additional $200 billion. And then should China retaliate to that, then he's looking to impose a further $200 billion. So you're looking at a total of $450 billion worth of goods from China imported into the US markets that potentially face tariffs ranging from 25% for that first $50 billion to 10% for this $400 billion that he's talked about. Just bear in mind that China, or the US, imported about $500 billion worth of goods from China in 2017. So you're talking about a tax, an additional duty on almost all goods imported into the US market from China. The fact that it's set at 10%, this duty that's being considered, suggests that they are considering and weighing up the inflationary impact, because you're talking about consumer goods, electronics, all the kind of things that you get in Walmart, of course. So a potential hit to US consumers and the bottom line, that is being weighed up. Trump said he's doing this because he's seeing no sign from China that they're prepared to change what he says is their unfair practices around IP and around technology transfer. And also interesting, it comes after one of his chief economic advisors said now is the time to ramp up the pressure on China given the strength of the US economy.
Tom, what are we likely to hear from Beijing as a response to this latest salvo from Trump?
Well, I think we can be safely assured that this is going to come as a surprise to policymakers here in Beijing. One thing that Trump has been fairly good at is keeping everyone on their toes, whether by default design or accident. So we're going to potentially hear from the Chinese later this afternoon at the regular press conference and get a statement from them there. They've said, of course, all along that they will retaliate and respond in kind, though it's very difficult for them to do that and to match a potentially $450 billion worth of tariffs because, of course, China, as you've been discussing, only imports about $150 billion worth of US goods. So then you're talking about additional measures. Now, Ender Curran earlier mentioned that there is one option for the Chinese, which is raising the rates, raising the duties from 25% anywhere up to 100%. That's something they could do. They could hit soybeans with tariffs at 100%. They could do other measures as well that we've been talking about over the last few days in terms of unofficial pressure on the investment here in the US market, in the Chinese market from US corporates, that $200 billion worth of US investment in China, whether that's holding goods up at port or their licensing or checking offices, putting hurdles in place for those US companies. They could do boycotts of US goods. They could reduce the number of travelers from China to the US. All those measures could be considered. But for now, we're going to wait, of course, from the official response from China.
All right, this spat is definitely weighing on the minds of global markets, which have been trading weak. Joining us on the phone line is Hans Goti. Hans, good afternoon from India. Thanks for taking our call. No one seems to be backing down from now, and it looks like the markets are starting to worry about the implications.
Yeah, it's a bit of a perfect storm right now. I mean, you have a lot of noise surrounding trades, and we don't know exactly whether there's going to be a full-blown trade war or not. So it's one of those risk-off phases that may last anywhere between 1 day and a week or something like that. But there will be other news coming in, and we'll probably look back on this in a week from now and say, okay, it was just a lot of noise about nothing.
Hans, you know, the markets has been here before, where these trade talks escalated and then it was forgotten. But in the past couple of weeks, we have actually seen the U.S. government, you know, walk the talk. What if this gets worse? Then, you know, what will the market take out of it?
Well, I'm not sure how much worse it can get, really, but it may be part of a negotiating tactic or whatever, but I think at some point the reality will set in that everybody loses in a trade war. I think what we really should be looking at, and I think that's probably more important than the trade issues, is monetary policy. Central banks have still this cloud over markets. I mean, we have the Fed raising rates. The last statement was relatively hawkish. So I think I will be much more worried about the U.S. economy taking a hit as a result of rising interest rates than about trade at the moment.
Hans, but that story is well documented in the markets. Or is there something that you think that the markets have not taken note of? We always knew that the Fed's going to go along this, 3 to 4 rate hike pace. We knew that they were going to wind down their balance sheet. The ECB would come in and start winding down their purchases as well. Is the market not fully aware of that situation playing out?
I think the markets are aware of it. At the moment, it seems that the markets are believing the Fed, and the Fed is telling us how strong the economy is, and that 3 more rate hikes are justified, or 2 more rate hikes are justified, balance sheet unwind, and so on. But don't forget, $600 billion reduction of the balance sheet every year will be the equivalent of another 100 basis point rate hike. So at some point, you're going to have an effect on the real economy. We have not seen that yet, and I think the market may not be fully prepared for that when the Fed all of a sudden realizes later in the year that the economy is actually starting to slow down. And maybe they have to consider a pause, and I think that's something the market does not fully recognize.
What does this mean for global currencies, Hans? Do you see the rupee getting stronger against most major currencies here on?
It all depends on the dollar. It seems to me that at least in the near term, this dollar rally seems to be running into some resistance. If you look at the euro and the British pound, they seem to be trying to find a bottom here. So we'll see what happens with the currency, because the dollar is very, very important for emerging currencies as well, especially for those countries with the high debt, which is denominated in US dollars. So if we see a lot more dollar strength from here, that would be bad news. But I'm more of the opinion that the dollar rally is stalling, and we may actually see a counter-trend rally in the currencies against the dollar in most of them.
All right, Hans, thanks so much for that quick call, and we'll talk more about local currencies in a minute. But first, let's just filter it through to how the domestic markets are reacting to some of the turbulence globally. Agam is here with us with the domestic market check. Agam.
Well, good afternoon, Ira. Not very well. In fact, considering the benchmark indices are trending lower, in fact trading near day's lows, with the Nifty as well as Sensex down by over 0.6%. As you can see on your screens, the Nifty Bank too is down by as much as 0.5%. Now in terms of the broader markets, again the cuts are just as deep. In fact, the small cap and mid cap indices are taking sharper cuts, specifically the mid cap index, which is down about. The India Volatility Index has also risen by as much as 3%, which means that a lot of traders out there are taking more and more positions when it comes to calls and puts on either side of things. In terms of some key sectoral movers, we have more weakness in the Nifty IT space, more weakness in the Nifty metal space. In fact, the likes of Vedanta and Hindalco declining for the second straight day, and some sharp cuts coming there as well. Nifty Realty Index as well bearing down on the broader markets. In terms of some key gainers, we have a handful, just hardly a few. Bajaj Finance, GAIL and Bharti Airtel among a few. But on the other hand, substantial weakness in OMCs, which were quite strong yesterday, are showing weakness today. And the likes of Indian Oil Corp as well as BPCL were declining in today's GF trade. Some profit taking coming there. On the whole, markets looking weak.
All right, Agam, thanks so much for that. The currency market's looking weak as well. The rupee has been trading under pressure below the 68 to a dollar mark. Let's get a view in on what's been happening in the currency markets, because there is some perceived intervention from the RBI, which has kicked off again. 68.21 on the rupee right now. Anand Bagri is domestic markets head at RBL Bank, joining us on the phone line. Good afternoon, Anand. Thanks for taking our call. What have we seen over the last couple of days once this weakness seems to have resumed? The RBI seems to be coming into support.
Yeah, Ira, in fact, at around 68.50 levels, I think there was a major resistance in terms of rupee. From there, we saw a correction. It came down to around 67 rupees. After that, there has been there's an up move only. In fact, you have seen the dollar index moving to around 94.70 levels, and rupee also at around 68.20, 21 levels. We believe that if dollar index is going to strengthen from these levels, and if rupee goes back to around 68.50, that's the previous top that it had made, I think we could see newer highs in rupee after that. Possibly it could touch around 70 rupees by the end of July. And any intervention is also not helping much, because there are large outflows which are happening. In fact, on the equity side, or in fact on the debt side also, if you look at some of the recent data, there has been a bit of selling only. So I think in these circumstances and the instability in crude also, that's lending to the confusion over the rupee movement. I think possibly we are headed higher only, up to 70 rupees. That's our understanding.
Okay. Global factors seem to suggest that oil is only, the US dollar is going to only get stronger from these levels, Anand. How do you see that playing out on the rupee, at least in the near term?
Yeah, in fact, if you look at the dollar index, I think 95 is a very crucial level. So if it breaches 95 levels, and the way things are happening, I think I'm reasonably confident that it would. So in that case, we think, my sense is the dollar index should strengthen a few percentage points from here, and that should lend further pressure on rupee and all the EM currencies.
So the move in the rupee, Anand, has not been out of line, like even in the last few days, has not been really out of line with EM currencies, right? So in that sense, the RBI's need to intervene is actually is questionable, perhaps.
Yeah, and also if you look at the export data and all, that's not been very encouraging. So from a macro perspective, or also from a longer term perspective, I think there needs to be further, possibly in line with other EM currencies and some of the other competing countries. I think possibly we need some more weakening in the currency. We could see some more weakening in the currency.
Technically, Anand, so now 68.50 is what everyone is watching for, to see whether this time around, if you hit that level, you breach it or not?
Yeah, 68.50 I think is a very crucial level, but this time I think this time I don't think we would be able to resist at those levels. I think we are headed higher.
And then the all-time lows are around 68.86, right, if I'm not wrong?
Yeah, 68.80, 85 levels, yeah.
All right, Anand, so you think that perhaps we'll breach those. Anand Bagri of RBL Bank, thanks for that quick conversation on the currency.
Thank you, Gara. Thank you so much.
That's the currency for you. Mumbai is India's financial capital. No surprises that equity flows are mainly controlled from the city. What's startling, though, is the quantum of money which has grown from 13% to over 60% over the last few years. Sajid has done some number crunching to give us some more details of where the money is coming from. Sajid.
You know, if you look at the handbook of statistics of SEBI, and they come out on an annual basis, it gives you a startling shrinking of the entire equity market, and that's concentrating into Mumbai. Maybe in 2010, you had Mumbai contributing 30 to 35% of the total turnover, and today it's around 60%. Cities like Gujarat, which used to be very influential in that, they have less than 2 or 3% of share of the turnover today. So that shows that, you know, the concentration that Mumbai is having, and shrinking of this entire equity cult following, which was earlier available in multiple cities, now is coming back into Mumbai there. The second one is we continue to be a traders market, because we continue to have only 30% of delivery volumes as compared to other countries where institutional trades are much higher, so delivery is much higher there. So if you look at the statistics, 66 or 67% of the total turnover is basically day traders or arbitrages and intraday trades which happen, and remaining is the delivery one. Another important thing which is there, as the concentration is coming back to Mumbai, you're seeing some of the top 5 players garnering more market share of the total turnover, and you can see that in case of BSE, which had somewhere around 20% odd in 2010, today top 5 members account for 34%. NSE has remained the same, around 30% as there, but BSE has seen a lot of concentration of volumes coming back to Mumbai there.
These are big brokerages.
These are big brokerages, which and members who account for a lot of trade. But the biggest surprise factor which is coming in is a daily average traded turnover, which is coming in for BSE and NSE. While since 2010 to 2018 and December 2017, the average volume, daily volume, has been in the range of 4,000 crores for BSE. It's remained flat. But for NSE, it has gone up from 14,000 crores to 28,000 crores. That's doubling of the daily.
Can you hazard a guess? So
it's basically how NSE has been able to get more number of people on board on its platform. They've cornered the entire incremental turnover into NSE, even though there has been competition from BSE with respect to various incentives given for bulk volumes or block trades or whatever. But they still have not been able to, the growth, the markets have doubled, right? In that sense, so the turnover has also doubled, but they're not being able to capture that increase in turnover in the equity turnover on a daily basis, and that's one startling feature which is coming in. Smaller cities, in terms of exposure to equity, are coming through mutual funds. We've seen this happening over the last 2 years, where the share of Mumbai has been gradually coming down, but cities beyond top 10 are putting a lot of money into mutual funds, and from there it is getting channelized into the stock markets. So that's one interesting trend which is coming in. We all know that market cap of BSE, which has a large number of stock, is now converging with the GDP of the country. 100% that happened at the end of December 2017, and it continues to be that way. But the fact is that despite that, the turnover increase in the market is not keeping pace with the economic growth. Now, especially GDP. If you look at last 4 or 5 years, you see that the turnovers have been varying between 40 to 20% in some years, and in last year it was 42%, which is even lower than the high it had of 49% odd 4 or 5 years back. So it's not keeping pace with the economic growth which is happening, and which is also giving an indication that there may be a lot of trading or exposure to equity market coming through mutual funds and other investment class, and not equity directly. So equity as a class and as a following is shrinking and is coming getting concentrated only in Mumbai, and moving away from some of the metro cities like Bangalore, Chennai, Kolkata. Kolkata in one point of time used to have good trading. It's come down. Ahmedabad, Baroda, Surat, all those markets have seen shrinkage of their contribution to the turnover for the market.
All right, Siri, thanks so much for that. Let's move back to the global economy. Former U.S. Treasury Secretary Lawrence Summers warns that developed countries are badly equipped for another recession, both economically and politically. In a conversation with Bloomberg News, he adds that central banks should be wary of raising interest rates just to stop inflation running slightly hot. Listen in.
The issue that's preoccupied monetary policy for the generation before the financial crisis, the avoidance of inflation, is no longer the top issue. The top issue, I believe, is the maintenance of sound growth and getting to full employment. And that's going to be a much more difficult challenge over the next generation than many suppose, because of the very sharp declines we've seen around the world in the neutral real interest rate. Declines that in many cases have been masked by the very substantial fiscal expansions we've seen.
I mean, you're obviously known for having popularized the fear of secular stagnation. I mean, in a sense, some people have thought that you'd walked away from that a little bit over the last few years, but I felt like you were sort of doubling down on it.
No, I think that's exactly right. Some people think that, well, the economies are growing. That shows that the secular stagnation theory was wrong. I have exactly the opposite view. It required enormous fiscal stimulus to get the economies to grow even reasonably adequately, and that demonstrates the validity of the secular stagnation thesis. Relative to what happened in 2013, when I first talked about secular stagnation, take the United States. You've had far more fiscal expansion than we had then. You have lower long-term interest rates than we had then. We have asset prices that have increased in an unsustainable way. And so it's not that the economy has somehow healed itself. It's that the set of developments predicted by secular stagnation theory have happened. And yet many make the mistake of condemning those developments as somehow inappropriate because they represent abnormal monetary policies or excessively expansionary fiscal policies.
You said the biggest risk to the global economy at the moment is, or the biggest priority is avoiding the next downturn. Most downturns historically have happened from a policy error, often a central bank policy error. Do you think that is more likely this time, or is the trade war starting to give you concern on that?
Trade war is not likely to be large enough that its direct effects damage the economy, but it's profoundly. But its psychological effects, its effects in increasing uncertainty could be very serious, and we're certainly getting later in a cycle of escalation. We've still got a long way to go before this is some kind of full-fledged trade war that would send the global economy into recession, but we've moved down the escalatory step.
That's Larry Summers. Let's move on. Russia and Saudi Arabia are said to be working on a compromise to calm down Iran, Iraq and Venezuela, who are opposing hiking daily production. Remember, the members are meeting in Vienna later this week. Bob Yano of Path Trading Partners says that this is not just the target, but the actual execution of production targets that will matter.
One thing OPEC has done for years is throw these floaters out there, leaks. I hate to use that word in the current political climate, but leaking things to media members directly from oil and energy ministers. So I don't even know if you'd call them leaks, but this is not quite close to the middle of what I had originally heard from Alexander Novak, which was 1.8. He then reduced it to 1.5. OPEC was talking 300, and there's plenty of members that don't want to do any. So I don't know how high the number's going to go. I'm expecting somewhere around 800,000, and then the implementation of it matters almost as much as the actual number. Is this an immediate increase? Is this something they're going to scale into? Are they going to reassess every month? Is Russia becoming a part of OPEC? There's quite a lot swirling around this meeting.
Yeah, what do you make of that second bit of massive news, which in itself would be, something we'd talk about for an hour?
Huge.
Russia and OPEC bonding, becoming brothers. I mean, that's quite significant diplomatically, isn't it?
I think it's the most significant thing that could come out of this meeting in Vienna. I mean, you're talking about the world's two largest oil producers consistently. The U.S. has popped up there on an occasion during this production cut, but both of them can turn on anywhere from 2 to 3 million barrels respectively without CapEx, which the U.S. can't do. So it's extremely significant if they become a permanent member of what they referred to as a sort of joint venture that will monitor oil prices and act if needed. That was actually part of the conversation when they interviewed Barkindo about this. So it's very, very significant. Again, that's more important to me than the actual number. I think the number is going to come in around 800,000, and then we have to see exactly how they're going to do it. Right now, the floater they out about 600,000 is rallying Brent, and they're seeing that and they're reacting to it in their meetings.
Bob, really quickly, if we get 800,000, what's the impact on the price of oil?
I think it's priced right now for 800,000 with the increase we saw today, and that's about it. We get more than that, you get a little bit of tightening of the spread. WTI will eventually catch up simply because the cost of transport, as that spread gets wider, becomes cheaper overall. So they'll catch up to each other. But at this point, I think 800,000, this is the price. We might even get a little bit of a sell-off.
All right, and this is a story we can't highlight enough. India could be suffering from the worst water crisis in its history. About 60 crore people are facing high to extreme water stress. That's according to a report by Niti Aayog, which came in recently. Can the situation get any worse? Well, the Niti Aayog cautions that it could.
Time on the show. Thank you so much for joining us today.
Countdown is up next.